Hi Brian, good morning and welcome to today's morning report on Thursday 28th of July with me, Richard Perry, market analyst at Handset Markets. We had the Fed meeting last night, or the statement certainly, and there was a mildly hawkish lean in the statement, but maybe not as much as the market had been sort of looking for really, because the dollar has been hit quite hard actually since that Fed meeting. Let me just show you the impact on the dollar. Initially, it reacted higher, but subsequently fell away, and it's continued to fall as the European session has gone on. The dollar's weaker against all the forex majors, apart from sterling, which is interesting. Now, the Fed statement sort of contained a couple of hawkish hints, but probably nothing to really nail on a September rate hike, which may have been possibly what the dollar was pricing for. In this rally that we'd seen since June. Now, let me show you the Treasury yields came off slightly, mildly lower on the Treasury yields, and the 2-year and the 10-year, but obviously the main impact has been through the dollar. Oil prices, interestingly, still under pressure. You had the oil inventories report yesterday, an oil inventory build in the States. In the EIA report. So that's not positive after the rig count started to increase. You started to see the oil inventories building up again. So oil sold off yesterday quite sharply, and it's not really been able to recover despite the weaker dollar today. So that's basically where we're at. Equity markets have been sort of buzzing around really. Mild initial sort of pressure to the downside has been unwound, basically flat now on the day on FTSE, DAX and CAC, mildly outperforming on the DAX. Wall Street was basically flat yesterday, nothing too significant in terms of direction. Asian markets were lower, but certainly I think the real impact is being seen through the dollar and also commodity prices as well, sharply higher on the gold price and the silver price. I'll talk about silver as my chart of the day, and also obviously focusing on gold later. In terms of your economic data today, let me show you. Nothing really. A little bit of European inflation data. You've got the German preliminary inflation. That's always precedes the eurozone inflation data. So that could give a bit of a steer, but. The jobless claims are the main one, 260,000 expected there, that's unlikely to do much. But the real key move is going to come overnight, I think, tonight. Bank of Japan, monetary policy overnight tonight. Now, a series of monetary easing measures are expected. Possibility of increasing ETF purchases, possibility of increasing JGB purchases, possibility of cutting the deposit rate further. Possibility, although highly unlikely, of talk of or positive talk of helicopter money. But the big issue is whether the BOJ or the expectations of the BOJ can be met. I personally don't think they will be, and I think for example, dollar yen I think will sell off on the back of the BOJ. But it'll be a lot of volatility, I think, tonight. So my chart today, silver. Commodity prices gained quite strongly on the back of this Fed meeting yesterday. The expectation that you're not going to get a September rate hike, it looks unlikely still. Markets pricing, I think, 18% on the Fed funds futures for September. December mildly lower as well. So this Fed meeting's not done anything really for the hawks of any note anyway, and subsequently the commodity prices have pulled higher again, and silver has sharply increased yesterday, breaking above the initial resistance around $20, and improving the technicals quite significantly. That stochastics crossover is a positive. MACD lines are turning up, RSI turning up from in the mid-50s, which is again still very positive. So that support there has held at 1920 quite nicely, and it's now looking to retest these highs. 2067 was a mid-July high, obviously the spike high 2110, but the initial resistance 2053, I think it is, no 2054, and 2067 sort of resistance range looks like it's now going to be tested. The early morning moves today have been again supportive for silver, so that is again, we're looking still positive on this one. Here we see the hourly chart. We broke the bottom, broke through this downtrend phase over the last sort of couple of weeks strongly, and it's now testing the top of the resistance again. So it's breaking higher today. It looks like it's even flagging higher, you could argue. Let's do a very quick and dirty flag target. You measure the pole, and then you measure that higher from the bottom of the flag. Whoops, wrong way. That would give you 2084. So it certainly does suggest that we're going to be testing these resistance and probably keep going towards the highs. So little minor corrections are seen as a chance to buy now on silver. You've got the initial support that came in overnight today, 2016, although you're quite strongly above that already, so there's quite a good band of support initially there. 20 figure I've been talking about as a pivot line, actually. Minor pivot line, 20 figure. Sort of supportive, and then became resistance. Minor area there. So 20 figure I think is a fairly reasonable support area now, I think, for any sort of considered corrections on the intraday chart, but certainly I think it looks as though that we've got a positive outlook on silver and we're looking higher again. So I wish you good luck in your trading today, and I will speak to you later.